Hi, so good morning, good afternoon, good evening, whenever you're watching this. So here we are with the next chapter in chargeable gains for individuals, which is chattels and wasting assets. So in part C of the syllabus area, we have already studied the basics of CGT. We went through the shares and securities. Now, we are going into chattels and wasting assets. Alright, so you must be wondering, what is chattel? Right, you must have heard chattel, but you must not have heard, I'm sure most of you must not have heard. It's not a term that we all use. It's somewhat a term that tax people use. So let's come and see what chattels is. Let's see what exactly this chapter is all about. Chapter is a very small chapter. It's very simple. At the same time, it's very important, highly examinable, especially in section A areas. Alright. Now, it says there, it is important to be able to identify a chattel and a wasting asset, as there are special rules for calculating the gain or loss arising for them. So all throughout here in part C, we are actually trying to understand how to calculate chargeable gains, okay? And here we are going to consider in the case of chattels and wasting assets. So let's see what chattels is. You must be curious as to what exactly chattel is, yes? So as you see there, chattels are defined as tangible movable property. So there are two things to keep in mind there, tangible, okay, and movable. These are the two factors to keep in mind. Tangible, movable property. What is tangible? What is the meaning of tangible? Tangible means we can touch it, like the calculator. It's actually a thing we can touch, we can feel it. It's a tangible thing. It's movable. Okay. For example, is building movable? No, building is not movable. So building is not a chattel. So chattel is another name for tangible, movable property. Example, a picture or a table. Now let's come and see what are wasting assets. All right. So wasting asset is an asset with a predictable life not exceeding 50 years. So an asset with life of 50 years or less than that are called wasting assets. In that case, what would be non-wasting assets? Logically thinking, any assets whose life is more than 50 years. So non-wasting assets means assets whose life is more than 50 years, whereas wasting assets mean, assets with life of 50 years or less than that. Now, let's combine these two terms which we just studied together, chattels and wasting assets. So, if you know what is the meaning of chattels, if you know what is the meaning of wasting assets, what would be wasting chattels? Wasting chattels will be tangible movable property with a life of 50 or less than that, the number of years are 50 or less than that, the life. What about non-wasting chattels? Non-wasting chattels are those tangible movable property whose life is greater than 50 years. Alright. So, chattels could be wasting or not wasting. So, why I told you the example is, in the exam, you should be able to identify whether it is a wasting chattel or is it a non-wasting chattel. You should be able to identify if it is a chattel or not. You should be able to identify if it is a wasting chattel or a non-wasting chattel. It's very important to be able to identify. This is a very key exam skill. Now, in your exam, the examples that come up, that's there in the table. You can see over there the table I've put there for you is frequently tested examples in the exam. Examples of wasting chattels, that is tangible movable property of a life less than 50 years. Some examples are greyhound. Do you know what is a greyhound? Greyhound is a breed of a dog. In the England, it is very famous, a very famous event, greyhound racing, like horse racing, right? So greyhound is a wasting chattel. Boat, plant and machinery, race horse. All of these are wasting chattels. What are some examples of non-wasting chattels? Some examples of non-wasting chattels are antiques, jewelry and paintings. Okay? Antiques, jewelry and paintings. So let's see what are some of the terms we studied right now. We saw what are chattels. We also saw what are wasting assets and non-wasting assets. We saw examples of wasting chattels and non-wasting chattels. Now, let's come to their CGT implications. Let's come to their tax implications. Let's look at the case of chattels. Alright. Now, chattels, as we saw, can be wasting chattels and non-wasting chattels. Wasting chattels are all exempt. All wasting chattels are exempt except for one case, chattels eligible for capital allowance. Can you give me one example of a tangible movable property that has capital allowance? I'll show you the list. So, these are some wasting chattels we saw. Can you give me any examples of tangible movable property that has capital allowance? Correct. If you said plant and machinery, that's the correct answer. So basically all chattels are exempt except for those chattels, all wasting chattels, all chattels that has a life of less than 50 years are exempt except for those chattels that have a life of, except for chattels that have capital allowances. Alright. Now, in the case of non-wasting chattels, there is something called the 6,000 rule. Let's see what the 6,000 rule is. So, once again, chattels are categorized into wasting chattels and non-wasting chattels. Wasting chattels are all exempt except for chattels eligible for capital allowance. What about non-wasting chattel? There is something called the 6,000 rule. Okay. Now, before we go into all these details, like I told you, you should be able to identify what are chattels. Okay. So, let us look at one more thing before we start doing questions. Okay. So, for non-wasting chattels there is a 6,000 rule. Let us go and see what the 6,000 rule is. When it comes to non-wasting chattels, there are three things to keep in mind. That is sale of a non-wasting chattel. There are three possible cases. Case 1, case 1 as you see there is when both the proceeds and the cost are greater than £6,000. Case 2 is when only any one of them is greater than 6,000. Case 3 is when both are less than 6,000. Let us see all the cases. Case 1 is when both the proceeds and the cost is greater than 6,000. In that case, what is the CGT implication? As you see there, we do the normal calculation, normal CGT calculation. Then, second case is when out of proceeds and cost, only one of them is less than 6,000, the other one is greater than 6,000. That is, there is both proceeds and cost. One is greater than 6,000, the other one is less than 6,000. Only any one of them is greater than 6,000. In that case, what are the implications? As we see there, if it is a gain, when will a gain happen? When the proceeds are greater than the cost. If it is a gain, it is the lower of these both amounts. We will come into that once we start doing the calculations. I will come to that again. But if it is a loss, deemed proceeds is 6,000. I will come back to this again. Now, what if both proceeds and cost are less than 6,000? It is exempt. So, we will do something. We need to learn to identify what are chattels, whether they are chattels, whether they are non-wasting, whether they are wasting. So, we will do this question, and the objective of us doing this question is to identify, I told you a very key exam skill that you require. Calculating is a skill that you require, but also a very important skill that you require is identifying which are chattels, which are not chattels, which are wasting, which are non-wasting. So, let us do this question to develop these skills. Now, we are going to do this example to help us see what exactly we are supposed to look into to identify if it is a chattel or not a chattel. So, take a look at the requirement. It says, for each of the above transactions, state whether they are chattels, wasting or not wasting, and whether they will be subject to CGT. So, basically what are we supposed to identify? One thing is whether they are chattels or not. Okay, are they chattels? If they are chattels, are they wasting or are they non-wasting? And also if they are subject to CGT. Now, this is a very important skill that you are supposed to have in the exam. Okay, not just the calculations, but once you see certain assets, you should be able to identify if it is a chattel or non-chattel. So, let us do this question. Okay, so here we have it. Now, let us look at the first one. Now, Mr. Willy Wonka has made the following disposals in the tax year 2019-20. A, let's start with it one by one. Let's go one by one. So, let's look at A. A painting was sold in July 2019 for 5,600. He originally bought it in February 1996 for 3,500. Is this a chattel? Yes, it is a chattel. It is a chattel because it is tangible movable property. So, yes, it is a chattel. Is it a wasting or is it non-wasting chattel? Now, what did we see? If you want, you can go back. We will look into our list. That is in the list which I showed you in the beginning. Okay. Now, usually paintings, they come under which category? Non-wasting chattels. Now, you can't refer to that every time in your exam. It's better that you have it in your mind. So, painting, you think painting is something that lasts for more than 50 years. So, definitely it's a non-wasting chattel. So, I'm going to write that non-wasting chattel. Then, next thing is it subject to CGT? That is it exempt? Let's take a look. Non-wasting chattels, we know we have to apply that rule, right? Now, let's see here. The painting was sold for 5,600 and bought for 3,500. So, do you remember in non-wasting chattel there was case 1, case 2, case 3, you remember that, right? So, as per this question, this is coming under which category? Actually, it is coming under case 3, where both of them are below 6,000, where both proceeds and cost are below 6,000. If both proceeds and cost are below 6,000, then how do you work things out? If both proceeds and cost is less than 6,000, then you know it is exempt. So you can write, since both proceeds and cost is less than 6,000, the painting is exempt. Painting is exempt from CGT. Okay, so that was A. Let's look at B. A piece of land which he bought in April 2011 for 2,000, which was sold in September 2019 for 5,000. So, is this a chattel? A big no. It is not a chattel, it's land. Is it tangible? Yes. It is movable? No. So, therefore, it is not a chattel. So, I am going to write there. It is, so I am going to write, land is not a chattel. Then, is it subject to CGT? Definitely it is subject to CGT, because there is no exemption for land. So, we can write land is subject to CGT. Alright. Now, let us look at the next one. Okay, let us look at the next one, C. He sold a vintage car for 25,000 in November 2019 that had originally cost him 5,500 in June 2005. So, is it a chattel? Yes. But what can you tell about it being subject to CGT? Now, if you told it's a car, it is exempt from chargeable gains tax, very good, excellent. Because when we study the chapter, when we are studying the basics of chargeable gains tax, do you remember I showed you many orange boxes where I gave you the exempt assets for CGT? So, actually cars are an exempt asset for CGT, alright. So, that is why car is exempt, right. So, you are supposed to say whether they are chattels or not. You can just write cars, you can just write that cars are exempt for CGT purposes. Cars are exempt for CGT purposes. Okay. Now, let us go to the next one. He bought a movable crane for 20,000 in August 1998, which he used in his haulage business. He sold the crane for 10,000 in Jan 2020. So, is this a chattel? Yes. How do you know whether it is a chattel? You know it is a chattel because it is a movable crane. So, yes, it is a chattel. Is it a wasting chattel or a non-wasting chattel? It is a crane. So, ideally it should have life less than 50 years. So, it is actually a wasting chattel. Now, we saw wasting chattels are all exempt except for one category, which is allowable for capital allowance. Now, since it is a crane, it is plant and machinery, so therefore it has capital allowance. So, we can write that there. We can write that down, that it is a wasting chattel, and since it is a wasting chattel, that is eligible for capital allowance, it is subject to CGT. It is subject to CGT. Clear, right? So, by doing this, what are we trying to do? So, basically exam questions do not come like this is a chattel or not a chattel, but exam question will test whether you are able to identify. That is why we are doing this, identifying, the skill to identify whether it is a chattel or non-chattel. Okay. Then next one, an antique vase was sold in August 2019 for 10,000. It originally cost 8,000 in April 2006. Okay. So, the vase was sold for 10,000 and it cost 8,000. Correct? So, 10,000 and 8,000. So, is this a chattel or a non-wasting chattel? What do you think? All antiques are non-wasting chattel. So, therefore, this is a non-wasting chattel. Now, non-wasting chattel, we know the 6,000 rule applies. Is this case 1, case 2 or case 3? Let us take a look. Sold for 10,000, cost was 8,000. So, both proceeds and cost is above 6,000. Therefore, like normal CGT calculation. So, we can write it is a non-wasting chattel, okay, and it is subject to CGT, bracket I am going to write normal CGT computation, normal CGT computation, alright. Okay. Then let us look at the next one, F. In October 2019, he sold his half share in a race horse for 5,000, which he had acquired in June 2005 for 4,000. So it's a race horse. Race horse is a chattel or a non-chattel? It's a chattel definitely. Is it a wasting chattel or a non-wasting chattel? It's a wasting chattel, exactly. So since it's a wasting chattel, it is exempt. Obviously, there's no capital allowance on it. So it is a wasting chattel. Okay, it is a wasting chattel and it is exempt from CGT. All right, it is a wasting chattel and is exempt from CGT. So A, B, C, D, E, F. Okay. Now let's look at the next one. Okay. Now improve your skills. It is very important to improve your skills in identifying. Let's look at the next one. So it says, which of the following are exempt from, which are chargeable to capital gains tax? So we have to identify whether they are exempt or whether they are chargeable. So we'll do something. We'll write them one by one. Is it exempt or not? So let's look at A. Gift of a necklace which is bought for 4,000. Its market value at that date was 7,000. It's a necklace. It's not exempt, right? Now it's a necklace, so we can say it is a non-wasting chattel. If it's a non-wasting chattel, we have to use the 6,000 rule. As per the 6,000 rule, is this exempt? No, it is chargeable. So we can write it is chargeable. So chargeable to CGT. You can write normal calculations. Chargeable to CGT. Then next one, sale of shares in a quoted trading company for 2,000, which were bought for 1,000. So it is shares. Shares are definitely chargeable to CGT. So 2,000 and 1,000, you see. Now you might be wondering, so can we apply the rules here? Is shares chattel? It is not a chattel. If it is not a chattel, you cannot apply any of the rules. Is it a wasting, non-wasting? That is irrelevant. It is not a chattel. Is it exempt? It is not exempt, because in the previous chapter we had studied about shares, right? In the previous chapter we had studied about shares, and you know very well that when it comes to shares, it is not exempt except for certain categories. This is not in that category. So it is not exempt. So I'm going to write chargeable to CGT. All right, chargeable to CGT. Let's look at the next one. Okay, sale of a motor car. So whenever you see motor car, keep in mind motor car is exempt from CGT. So I'm going to write exempt. So you can write there, motor cars are always exempt from CGT. Motor cars are always exempt from CGT. Okay, motor cars are always exempt from CGT. Then next one, boat. So is a boat a chattel or a non-wasting chattel? I mean, is it a chattel? Yes, it is a chattel. Is it a wasting chattel or non-wasting chattel? It is a wasting chattel. Yes, it is a wasting chattel. So since it is a wasting chattel, it is exempt. Correct? Okay. So exempt from CGT. So bracket I'm going to write, this is a wasting chattel. Okay. Now next one, sale of a painting for 5,000, which was acquired for 1,000. Painting, it's a non-wasting chattel. Now if it's a non-wasting chattel, is this exempt or is it chargeable? Is this case 1, 2 or 3? Both are less than 6,000. So definitely this is case 3. So it is exempt from CGT. Okay, it is exempt from CGT. All right. So non-wasting chattel, exempt from CGT. Why? Both are, you know what is the both I'm writing here, right? So both are less than 6,000. What is the both I'm writing here? The proceeds and the cost. All right. Okay. Then next one, sale of a greyhound for 10,000, which is acquired for 5,000. It's a greyhound. It's a dog. So is this a wasting chattel or a non-wasting chattel? It's a wasting chattel. If it's a wasting chattel, it's always exempt, except for those that are eligible for capital allowance. We know here there is no capital allowance. So I'm going to write exempt. Exempt since it is a wasting chattel. All right. Exempt since it is a wasting chattel. So by doing these both questions, the aim was you should be able to identify whether it is a wasting chattel or a non-wasting chattel. You should be able to identify whether it is chargeable to CGT, whether it is not chargeable to CGT. So I hope these both questions helped in understanding that. Now that we learned how to identify whether it is chattel or non-chattel, if it's wasting or non-wasting, let's move on with the calculations. Okay, now usually this will come up as MCQs. Now since we are doing this chapter, you know all of this relating to chattels and all that, but in the exam you should be able to identify whether it is chattels, what kind of question it is it chattel, non-wasting and all that. Alright, now here you see a question. Andre sold a picture on 1st February 2020 for 6,600. He had acquired it on 1st March 2010 for 3,200. So here, is this a chattel? Yes, it is a chattel. Is it a wasting or non-wasting chattel? It's a non-wasting chattel. For non-wasting chattels, do you remember the chart you see here? This is the chart you're supposed to be using. Okay, this chart that you're using, this chart you see here, that's what you're supposed to use for the non-wasting chattels. So here, is it case 1, case 2 or case 3? What was case 1? As you see here, when both proceeds and cost is greater than 6,000. Case 2 is when proceeds and cost, any one of them is less than 6,000. Third case is when both proceeds and cost are less than 6,000. Okay, let's do the question. Let's go on with the question. Calculate chargeable gain. So here let's see if it's case 1, case 2 or case 3. Now, sold a picture for 6,600. Yes, and acquired it for 3,200. So here it is case 2 because any one of them is greater than 6,000, any one of them is less than 6,000, that's case 2. Here we have case 2. Now let's go and see what is the rule if it's case 2. Now if it's case 2, we have to check if it's a gain or a loss. Okay, now let's check here, will it be a gain or a loss? You know, proceeds is 6,600, cost is 3,200, so definitely it's going to be a gain. If it's a gain, what's the answer? They say if it's a gain, chargeable gain is the lower of the normal calculation and 5 by 3 into gross proceeds minus 6,000, lower of both of this. So let's go and go ahead with this. Okay, so first let's calculate the gain. Let's calculate the gain, which is proceeds minus cost. Proceeds minus cost. Now you must be wondering, why am I saying it's gain? It's actually the chargeable gain, right? Yes, it is a chargeable gain, but here since it's a special case, lower of two amounts, that's why I'm going to write as gain. So 6,600, then cost is 3,200. So the chargeable gain, yes, so not chargeable gain again, we have to, let's calculate the gain. So the gain here, let's see what is the gain. Gain is equal to sum 3,400. But what is the chargeable gain? Chargeable gain, as we saw, it's a lower of two amounts. It's a lower of, which are the two amounts? Let's see the two amounts. Okay, so it's a lower of A, normal gain, which is 3,400, and B. What is B? Let's go and check it out. As you see here, 5 by 3 multiplied by gross proceeds. Why it is said gross proceeds? Specifically, see if there is any incidental cost of sale. You remember in chargeable gains for individuals chapter we had studied incidental cost of sale. If there is anything like that, you cannot reduce that here for this. So 5 by 3 multiplied by gross proceeds minus 6,000. Let's see that here. So 5 by 3 multiplied by gross proceeds. Here gross proceeds is 6,600. 6,600 minus 6,000, which is, so 600 multiplied by 5 divided by 3, which is 1,000. Okay, so lower of is a lower of both of this. Chargeable gain is a lower of. So the answer is, so chargeable gain is, so what is chargeable gain? Chargeable gain is £1,000. If this is an MCQ question, you don't have to do it this way. You can just do the calculation on your, in a calculator. You can do the calculator. So I hope this is clear, right? Basically, you have to identify which case it is. Is case 1, case 2, case 3. Okay, whichever case it is, identify that, and then you write lower of. Like here you saw it's case 2. If it's case 2, once you understand it's case 2, you see if it's a gain or a loss. Here we saw it's a gain. If it's a gain, it's a low, whichever is the lower of. All right. So we'll continue with the questions. We'll keep doing a few questions now to be thorough with this. All right. So moving on to the next question. Okay. Now here you see this person called Brito. So Brito bought an antique table for 6,500 in September 2007 and sold it for 5,600 in December 2019. He incurred 250 to advertise it for sale. Calculate the allowable loss arising if any. So already they have mentioned it to us as an allowable loss. Anyways, let's check out the details. It's an antique table. Yes, it's an antique table. So therefore you know it's a non-wasting chattel. If it's a non-wasting chattel, check is it case 1, case 2 or case 3. Here which case is it? You know, here when you see bought for 6,500, sold for 5,600. So it is case 2. Yes, it's case 2. If it's case 2, we have to check if it's a gain or a loss. So here, will it be a gain or a loss? If you take a look, he bought it for 6,500, he sold it for 5,600. So is this a gain or is this a loss? It will be a loss because he sold it for a lower price than how much he spent for it, correct? So this is actually a loss. Yes, it is actually a loss. Now, if it is a loss, what is given to us in the table, in the chart, as you see in the chart, deemed proceeds is 6,000. Deemed proceeds is 6,000 is, it means that in case 2, you identify it's case 2 and once you see it's a loss. If it's a loss, whatever the proceeds given in the question, in the answer you will write the proceeds as 6,000. That is the meaning of deemed proceeds as 6,000. Let's write that down here. Okay, let's write that down here. We'll write that down. Okay, so proceeds. So remember deemed proceeds 6,000. So here I know in the question it's given as 5,600, but since it is case 2, I know it is a loss. So therefore proceeds is 6,000. Okay, proceeds is 6,000. Then what it is given? He incurred 250 to advertise it for sale. So less that, less advertising cost. So advertising cost, it is basically an incidental cost of sale. So 250. Okay, then what is the cost? Let's see what is the cost. So less cost. What is the cost? 6,500. Okay, so what is the allowable loss? Let's calculate what is the allowable loss. Okay, the allowable loss is, we'll see, it is, as you can see here, your allowable loss is 750. Your allowable loss is 750. You see the allowable loss 750. All right. So that is the case. So here what did I do? I identify that the antique table, it is actually what? I identify that the antique table is a non-wasting chattel. Once you identify the non-wasting chattel, you have to see if it's case 1, case 2 or case 3. Here I knew it is case 2. If it is case 2, identify whether it's a gain or a loss. It's simple, right? So let's do more questions. So here you see the next question. Okay. So Mandy bought 2 antique tables for 1,000 each. She sold them both for 6,400 and 13,600 respectively. All right. She sold them both for 6,400 and 13,600 respectively. All right. So here it's an antique table. So it's a non-wasting chattel. If it's a non-wasting chattel, we have to see if it's a case 1, case 2 or case 3. Basically, she sold 2 tables here. Both of them had a cost of 1,000 and both of them had sales price of greater than 6,000, as you can see here. Yes. So it says case 1, case 2 or case 3. It's case 2. Why? Because only one out of proceeds and cost is greater than 6,000. Therefore, that's what I'm showing you here. She sold them both for 6,400 and 13,600. So basically this is case 2. Once you identify it's case 2, you have to check if it's a gain or a loss. Is it a gain or loss? Both the tables are costing 1,000 and their sales is 6,400 and 13,600 proceeds. Yes. So if you take a look at this, okay, if you take a look at this, both of them are cases of gain. So we'll do something. We'll do both the calculations separately. All right. We'll do both the calculations separately. Okay. So here, let's start off with the tables. Okay, we are going to start off with the tables. So I'm going to write first the table 1. Antique table 1. So antique table 1. Okay. Next one is the antique table 2. So I'm just naming it. Okay. Antique table 2. All right. Antique table 1, antique table 2. Let's look at antique table 1. We'll write the proceeds. So proceeds is given to us. The first one is 6,400. Then cost is, what is the cost? Cost is 1,000. Now the resulting answer Do I write it as gain or chargeable gain? Remember guys, this is actually case 2. If it's case 2, you cannot write it as a chargeable gain, because as you see here, if it's case 2, chargeable gain is a lower of your normal calculation 5 by 3 into gross proceeds minus 6,000. So first let's find out the gain. Okay, we don't have to specifically write gain, we can just write 5,400. Then underneath that we can write, yeah, chargeable gain. So chargeable gain is lower of, and then what is the first amount? A, normal gain 5,400. B, what is B? 5 by 3 multiplied by gross proceeds minus 6,000. Here gross proceeds is 6,400 minus 6,000, and what is the answer there? Let's do the calculation. So 400 multiplied by 5 by 3, which is 667. Okay, 667 or 666. So actually what is the answer here? Chargeable gain is 667. So chargeable gain is 667. Alright, let's go to antique table 2. I hope antique table 2 is something you can solve. Okay, so proceeds is 13,600. Then less cost. Okay, less cost. What is the cost? Cost is 1,000. Cost is 1,000. So that means what is our, what is our gain? So our gain there is 12,600. If the gain is 12,600, we know chargeable gain is lower of 2 amounts. So let's write that down. So chargeable gain is lower of. Chargeable gain is lower of. Okay, so chargeable gain is lower of 2 amounts. What are those 2 amounts? A, 12,600, and B, 5 by 3 multiplied by gross proceeds. What are the gross proceeds here? Gross proceeds is 13,600. Gross proceeds minus 6,000. Alright, gross proceeds minus 6,000. Let's see how much that is. So 13,600 minus 6,000 multiplied by 5 divided by 3, which gives us the answer as 12,667. Yeah, so it's a lower of 12,600 and 12,667. Alright, so it is a lower of both of these amounts. So what will be the final answer? Final answer is 12,600. Now we'll do another question here. Requirement is calculate the allowable loss on disposal of the picture. So they've already mentioned it to us that it's an allowable loss. Okay, so let's start off. Okay, now first of all, it's a picture, so it's a non-wasting chattel. Is it case 1, is it case 2, or is it case 3? Okay, this is, let's take a look. So bought a picture for 10,400, so that means that's a cost. Then market value slumped, so that means Bosco sold the picture for 500 less disposal cost of 50. So you see there, one is greater than 6,000, the other one is lesser than 6,000. So this is case 2. Case 2, if it is case 2, is this a gain or a loss? It is definitely a loss. Okay, so if it's a loss, deemed proceeds is how much? Deemed proceeds is, as you see there, it's going to be 6,000. Okay, so deemed proceeds, as you see in the chart, deemed proceeds is 6,000. Let's go ahead. All right, so the proceeds is 6,000. Okay, proceeds is 6,000. Then let's see what next. Proceeds is 6,000. Then after that, let's see what's the next calculation. Okay, proceeds is 6,000. So less cost. What are the cost? So bought a picture, so cost to the market. For the artist work slumped, Bosco sold the picture for 500 less disposal cost. There's a disposal cost, so I didn't write that. So less disposal cost of how much? 50. Then what else? There's a disposal cost of 50. And then less, what else is there? Disposal cost is there. Then the purchase price, so less cost. So I'm going to write less cost. What is it? 10,400. Okay, 10,400 less purchase cost of 500. So purchase cost, I'm going to write less purchase cost. That is any other cost relating to the purchase. Purchase cost is 100. Don't think that is the purchase cost as in the cost we pay to purchase it. No, it is the incidental cost of purchase or incidental cost of acquisition. So 6,000 is the deemed proceeds. So I'm going to write that. I can write there as the deemed proceeds. All right. Deemed proceeds, less disposal cost, less cost, less purchase cost 100. Okay. Now the market for the artist work, so we already wrote everything down, right? 500, yes. So we didn't take 500, we took 6,000 less 50, yes, that's also written. Then 100 is also taken. So now what is a chargeable gain? It won't be a chargeable gain, it will be an allowable loss. Let's see if it is an allowable loss, how we do the calculation. Okay, allowable loss calculation. Let's see how the allowable loss calculation is. So we just do the sum function and then we get the answer as pound 4550. So that's your allowable cost, allowable loss. Now you must be wondering, we did many questions of case 2. Why aren't we doing any question of case 1 and case 3? Because we had already discussed it in questions 1 and 2. When is it exempt? When is it case 3? When it is a case 3, what do you do? That is both your purchase price as well as your sales price, your proceeds and cost. If it is both less than 6,000, it is exempt. CGT is nil. There is, what is the meaning of exempt? Exempt means chargeable gain is 0. Then what if it's case 1, that is both proceeds and costs are greater than 6,000? In that case, do the normal calculation. We've done many such questions. Yes, we already did in question number 1 and 2. Yes, we had already discussed that. So if case 1 comes up, do the normal calculation. So this is how we do questions based on non-wasting chattel. So if you take a look at this chart, we have already considered non-wasting chattels. Okay, we already considered non-wasting chattels. We did a few questions. Now, in wasting chattels, we know all wasting chattels are exempt except for chattels eligible for capital allowance. So let's see the rules for the chattels eligible for capital allowance. One example of a chattel that is eligible for capital allowance is plant and machinery. So it says here, the following rules apply for chattels eligible for capital allowances. Alright, what are the rules? If it is sold at a gain, calculate the gain as normal, applying the 6,000 rule if applicable. Alright, so what is being told there? If a chattel eligible for capital allowance is being sold at a gain, we have to apply the 6,000 rule. That's clear, right? Now, what about if it's sold at a loss? Let's see what if it's sold at a loss. In the capital loss computation, the net capital allowance are deducted from the allowable expenditure. Why? So let's see why. Accordingly, plant and machinery which is eligible for capital allowances and sold at a loss results in a no gain no loss situations for CGT purposes. Alright, no gain no loss situation for CGT purposes. So basically what happens here, when a chattel eligible for capital allowance is sold at a loss, okay, so if it is sold at a loss, what happens? If it is sold at a loss, then the final answer will be 0, no gain no loss. So how do you do that? If it is sold at a loss, basically your proceeds are greater than your cost. So from your cost, you reduce how much ever amount is remaining to make it 0, you'll reduce the amount as capital allowance. We'll do something. Let's try out these examples to be clear on it. Okay, so here, imagine there's a normal exam question. Serena bought a machine for use in her trade for 35,000. In October 2019, she decided to replace it and sold the old machine for 40,000. Calculate chargeable gain. So first of all, identify what kind of asset this is. It's a machine. If it's a machine, you know it is a wasting chattel which is eligible for capital allowance. Right? So if it is a wasting chattel eligible for capital allowance, is it sold at a gain or loss here? It is sold at a gain. Yes, it is sold at a gain actually. So how do you calculate? So if it is sold at a gain, we apply the 6,000 rule. We apply the normal 6,000 rule. Okay, so here is it case 1, case 2 or case 3. If it's 6,000 rule, it's case 1 because both are greater than 6,000. If both are greater than 6,000, we calculate in the normal way. So proceeds less the cost. Alright, proceeds less cost. Okay, proceeds less cost. Let's see how much that is. Okay, so proceeds is 40,000. Proceeds is 40,000. Then cost is how much? Cost is 35,000. So that means our chargeable gain. Let's see how much our chargeable gain is. So chargeable gain is pound 5,000. Alright, chargeable gain is pound 5,000. Chargeable gain is pound 5,000. Alright, 40,000 minus 35,000. Chargeable gain is pound 5,000. Okay, now let's see the next question. Freddie bought a machine for use in his trade for 35,000 in April 2008. In October 2019, he decided to replace it and sold the old machine for 26,500. Calculate the chargeable gain or allowable loss arising. That's the question given to us. Okay. So what are we supposed to do here? Bought a machine for use in trade. Okay, so it's a machine. So you know it as a chattel. It's a wasting chattel but is eligible for capital allowance. If it is a wasting chattel eligible for capital allowance, what do you do? If it is a wasting chattel eligible for capital allowance, see if it's a gain or loss. Here it's a gain or loss. Bought for 37,000, sold for 26,500. So definitely it's a loss. What do we just see? If it is a loss, then it has to be a no gain no loss situation. So we have to adjust things in such a way that it results in a no gain no loss. Let's see how that works out. Okay, so we'll first write down the proceeds. So proceeds, what are the proceeds given to us? 26,500. So 26,500. All right. Then what is the cost given to us? Cost given to us is 35,000. So 35,000. What do you do from there? From 35,000, how much do you reduce? Basically your answer, your final answer must be 0, which means even the cost must be 0, correct? So how much must you reduce? So I'm going to write there less capital allowance. Anyways, they'll be having capital allowance. That capital allowance we can show it here. How much is that? How much do we reduce? So that is 35,000 minus 26,500, which is 8,500. Okay, which is 8,500. So if you reduce 8,500 from there, you get the answer as 26,500. Yes, 26,500. So your cost is 35,000 less 8,500. Okay, less 8,500. So let's do that. Okay, less 8,500, 26,500. So that is our cost. Okay, so that is actually our cost. Okay, so minus 26,500. So what's your final answer? Your chargeable gain is 0. So chargeable gain is 0. All right, your chargeable gain is 0. Okay, how did this happen? This is a chattel which is eligible for capital allowance. If it is a chattel eligible for capital allowance, then what are you supposed to do? If it's chattel eligible for capital allowance, that means you have to do things in such a way that it is eligible for capital allowance. Is it a gain or a loss? So here you know it's a loss. If it's a loss, your final answer must be 0. How do you do that? By using the capital allowance given to you. All right. So this is a case this is how we do the calculation in case of chattels eligible for capital allowances. So let's now go into one of the last areas of this chapter, other wasting assets. That is, in this chapter we considered how to calculate when it comes to non-wasting chattels. We also saw how to do calculations as to chattels, wasting chattels. Now we are going to another category which they are not chattels, other wasting assets. Other wasting assets means assets with a life of less than 50 years, but they are not chattels. They are not tangible, they are not movable. Example is a copyright. If a copyright is being sold, you know how the chargeable gain arises. So this category covers wasting assets that are not chattels, as they are not tangible and are not movable. The allowable expenditure on these assets is deemed to waste away over the life of an asset on a straight line basis. Alright. So other wasting assets, how you calculate the cost is actually depreciation, like depreciation on a straight line basis. Okay. So how you calculate the cost is like this. Okay. So cost multiplied by, so I'll just put the cost for you. Okay, so how we calculate the cost is, so the allowable cost is, okay, so I'm going to put the calculation that you can see it, cost multiplied by remaining useful life. So that's a bracket there, remaining useful life divided by estimated useful life. Okay, cost multiplied by remaining useful life divided by estimated useful life. Remaining useful life as in at the time of the sale, what was the remaining useful life. All right. So that's how you do the calculations, okay, of the cost if it is other wasting asset. So I'll help you with two examples. Okay. So here you see one example. So on 1st February 2020, Iana bought a wasting asset at a cost of 24,000. It had an estimated useful life of 30 years. She sold the asset on for 38,000 on 1st Feb 2020. Calculate chargeable gain or allowable loss. So when you see wasting asset that is not a chattel, you have to identify that this is a case of other wasting assets. Okay. So in this case, what are the proceeds? What is the cost? Okay, so what are the proceeds given here? The proceeds are given to us as 38,000. So proceeds is 38,000. Then what is the cost? We just had discussed it. Cost is the original cost multiplied by remaining useful life by estimated useful life, estimated total useful life. Let's find that out here. What are the cost? She had bought it for 24,000 multiplied by remaining useful life. When did she buy it? She bought this on 1st February 2010, and that time it had a useful life of 30 years. She is selling it on 1st February 2020, which means 10 years later. If she is selling it 10 years later, how much more life does it have? 20. So multiplied by 20 divided by estimated useful life of 30. You can do the calculations there. 24,000 multiplied by 20 divided by 30, which is 16,000. So cost is, you can write there 16,000, right? Cost is 16,000. Okay, cost is 16,000. 38 minus 16, cost is 16,000, which is 22,000 is the chargeable gain over there. Okay, so we'll do one more question to finalize, to actually get a good idea. Here also they said Janice bought a wasting asset. Okay, Janice bought a wasting asset at a cost of 19,000. It had an estimated useful life of 40 years. She sold the asset for 30,000 on 1st March 2020. So what are the proceeds? Proceeds is 30,000. Proceeds 30,000. What is the cost? What is the cost? Cost multiplied by remaining useful life by estimated useful life. So what is the cost given here? Cost is 90,000. So 19,000 multiplied by remaining useful life. When did she buy this? She bought on 1st March 2015. Then selling this on 1st March 2020, which is 5 years later. So remaining life is 35. So into 35 by 40. Okay, so you can calculate that. 19,000 multiplied by 30 divided by 40, which is 16,625. 16,625. Okay, so chargeable gain. The chargeable gain is, let's see the chargeable gain. Chargeable gain is 13,375. Okay, 13,375 is the chargeable gain. Okay, because this is an other wasting asset. So that somewhat brings us to an end of this chapter. So what did we discuss in this chapter? We were looking at chattels and wasting asset. When they sell chattels or wasting asset, how the chargeable gain arises. Okay, we saw in the case of non-wasting chattels, first of all we need to learn to identify if it's a chattel or not, and then if it's a wasting or a non-wasting asset. We saw the category of non-wasting chattels where there was case 1, case 2, case 3. We saw in the case of wasting chattels, which all are exempt. There is also the chattels eligible for capital allowance. Chattels eligible for capital allowance, also there is gain and loss. And then lastly we just saw the other wasting assets. So that brings us to an end of this chapter. So signing off with your ACCA tutor for paper tax UK. So see you during the next chapter. Bye bye.